Welcome to the All About Alts podcast, where we explore the world of alternative investing to help you find financial independence. Join our host, NewView Trust's president, Jason DeBono, as he covers a variety of topics with different guest speakers to discuss tax and alternative investing strategies. It is never too late to start taking control of your financial future, and we are so excited for you to be joining us for this opportunity to hear from some of the best in the business.
Hello, everybody. Welcome back to the All About Alts podcast. I am your host, Jason DeBono, and I am joined by Jerry Chu from Lofty.ai. Exciting group and really excited, Jerry, to have you here.
Thanks for having me here. It's great to be here.
Yeah, so, I was introduced to Lofty actually through one of our clients who I've gotten to know over the years that is an investor in Lofty.ai, and it's really cool. And I love podcasts like this because I think sometimes I may be the most intrigued one to start and get some questions answered that I have. And I'm sure a lot of my questions are going to be the same types of questions our listeners have. So I think everybody's in for a treat today. Let's just start with what's Lofty, right? What is it at a high level? And we'll talk a little bit about how it kind of came to be.
Yeah. At a very high level, Lofty is essentially a marketplace where anyone can come and sell and buy real estate. The difference is instead of traditionally, which is one seller to one buyer, the real estate is fractionalized. And so you can come in and sell a portion of a house that you own, or you can come in and buy a portion of another house that someone else owns, right? And this creates a lot of flexibility and gives people the ability to invest and create a real estate portfolio all across the country and then manage it themselves completely online, virtually, without ever having to set foot into the property or visit a different state.
It's so fascinating to me, and I love this fractional ownership of real estate because it really takes the idea and some of the real hurdles for a lot of people to get into real estate, and it strips them down. I think the minimum investment's like $50, if I recall, or maybe even smaller than that.
Yeah, so when a property is first converted into these fractional shares, when someone onboards it onto our platform, available for our users to purchase, they always start at $50 per share. But as time goes on, some properties will, as you know, it's the general real estate market. We don't control these assets. We don't co-invest alongside our users. We don't own these properties and flip them onto our users. We're just a marketplace. And so, in the general real estate market, some properties outperform and some properties underperform. And so overall, you'll see the free market kind of take over where some properties will actually trade above their originally listed price, while others will actually trade below it, which in many cases represents actually a good deal. There are specific users on our platform that don't actually purchase any interest in properties when they're first onboarded into the platform. They wait until they can see potentially and get a discount, or if they believe other people have mispriced the property, they will come in and buy it at a heavily discounted price.
Right. It's so cool to talk through this idea of kind of a per unit price, because it really takes real estate from its core, today, and it really starts to make it replicate a lot like the stock market.
Yeah, that's exactly it. I think, the stock market and real estate market a long time ago were extremely similar. There was no exchange. Everything was done peer to peer. In fact, I believe I learned this actually in school when I studied financial engineering. It was a story one of the professors told. I believe the way Wall Street formed was actually because back in the day, there was no exchange, right? There was no New York Stock Exchange, no NASDAQ. So there was a specific location on Wall Street where all the traders and people who were buying and selling stocks would just meet up in person and say, I'm selling, 3 shares of company X. And then you would do these peer-to-peer transactions. And real estate is that way as well, if you think about it. When you're buying a house, typically you do use representation like a real estate agent, you use companies like escrow companies and lawyers, but at the end of the day, you are buying just from another person, right? There is no sort of centralized exchange, if you will. Now, the stock market obviously evolved into what it is today. And one of the main benefits has been, transparent market prices and also greater market efficiencies, right? So that if something is mispriced, very quickly someone will come in, arbitrageurs, and they will make sure that the price reflects, an actual true market price that people agree on. Real estate, unfortunately, has not benefited from that, and so you often see this in the market where it's very localized. A lot of things are mispriced, and we believe with greater transparency and more efficient pricing that it'll improve this industry as well.
Well, it's very exciting to kind of see that parallel, and I love that story about Wall Street. Can you imagine back in the day, kind of showing up with your stock certificates, under your arm, and
Yeah.
and I'd almost even say convincing, right? If you're a seller, you're making a case for this third party company to
Yeah,
whomever you're selling it to, or vice versa. So,
exactly.
seeing real estate bought and sold in a way where, yeah, maybe a little bit of this market equilibrium is created organically, and some of this mispricing, whether it's too high or too low, it works itself out. How did you get here? I mean, your background, you were at Barclays in their treasury risk management, right? So you're a USC undergrad, but you've got a master's in financial engineering, right? Like, walk us through this kind of twisting and turning, and how did Lofty kind of come to fruition?
Yeah, great question. So it's been an interesting journey for sure. I would say when I was younger, growing up, I've always been really, a quantitative person. Like numbers come naturally to me, sciences come naturally to me. So I was always interested in that field. And, you know, one of the jokes is always like, if you study math, like you end up being a math teacher or like a math professor. And it's like, that's not really necessarily the career that I want, despite being very interested in math. So what else could you do? And then over the years, a new field kind of emerged called financial engineering. And so you hear this a lot now where they're referred to as quants. So people that work at hedge funds, at quantitative trading firms, high frequency trading firms, they make a really good living. And these are all like incredibly smart people, sometimes with backgrounds in rocket science, pure mathematics, physics, things like that. And they're basically applying these numbers to the stock market or financial instruments as opposed to what they're traditionally trained for. And so when I learned about that, I was like, oh, great, I get to pursue something I'm interested in, and simultaneously have a good career. So I kind of planned my career in that direction, right? So study math for undergrad, then got my degree in financial engineering, and then went to work, actually briefly on Wall Street. But what a lot of people don't realize is, when you're working for a big bank, there was a lot of regulations that were introduced after the last financial crisis, in '08. And pretty much, proprietary trading has mostly basically been killed off, at all these big banks. So a lot of the things I thought I would be able to do at some point, is just not feasible anymore unless the regulations change, which I don't see it happening. And so you end up, there's still interesting work, but it wasn't quite what I imagined it to be. And so that's when I decided, I don't really see myself doing 30 years of this for my career. So I wanted to pivot into tech. So I taught myself how to code, and I went to work at another startup where I met one of my co-founders at Lofty today. And, I talked to him about this business idea that I've always had, which is actually how Lofty originally started. And the idea was basically you could take all of this, what we called unconventional data sources. So think geotag tweets and Instagram photos and things you don't traditionally use, but have location tags in them. You could actually build artificial intelligence, a neural network to actually ingest this type of data and sort of predict which neighborhoods in real estate would be better for investments in the near future, because it was essentially predicting which neighborhoods would gentrify in the near future. So basically, it could kind of like tell you that, like, look what happened to Brooklyn, right? Walking backwards, everyone would be like, oh, I wish I bought something there 20 years ago or like 10 years ago. And this algorithm essentially was aiming to do that. It would tell you ahead of time, like, hey, this neighborhood, based on people posting on Instagram, the type of new businesses opening up and the reviews left for these businesses, seems like, hey, this area is starting to really take off, and it might be worthwhile to purchase and invest in real estate there. So that was our initial business model. And we sold that as a subscription product. So we started getting a lot of users coming in who are interested in, buying their first rental property, investment property, and they wanted to use this tool to help them filter out geographies, right? Otherwise, you go on Zillow and there's like 10,000 properties available for sale. Like, which one do you even look at, right? And so they were using that as a filtering tool. So we did quite well and actually grew that a bit. But we quickly noticed what we describe as a more interesting opportunity, which is we noticed a high degree of churn from our existing user base. And they were coming to us and saying like, hey, love the software, but man, like I'm like a software engineer, or like I have another job, like my full-time job is consulting. I was going to do this on the side, but even though I found the location I was interested in, that was like maybe 10% of the work. And then actually like making offers, finding deals, and like trying to close on them, and then like dealing with loans and mortgages, and like all that annoying stuff you typically do in traditional real estate investing, that was 90% of the work. And they just got frustrated, even though they found a location and properties that they were interested in. Oftentimes, after 5 or 6 months, they haven't closed a single deal yet, and they've spent hours on this work. And so they just came back and they're like, this is great, but I don't really think it's for me. Like, I wish there was an easier way to invest. And that's kind of when the light bulbs came on our heads. It's like, hey, what if instead of just finding and sourcing properties where people are saying like, hey, maybe you should look at this one, we directly just built in a way where they can say, yeah, I love that property, I want to buy it. And they just click a button, and they were now the owner, and they benefit from all the typical tax benefits and ownership benefits of investing in real estate. So we then looked for a method to be able to do that, and ultimately pivoted our business model to what Lofty is today.
Well, it's amazing to hear kind of the origins and some of the left and right turns that were taken, and ultimately, so May of 2021, Lofty officially launches on the marketplace side. I mean, you guys have been quoted in Forbes and the Business Journal and NBC. I mean, how's that been? I mean, that's a lot of activity in a short period of time. Where's Lofty at today? In terms of milestones and kind of what lies ahead.
Absolutely. So, it definitely seems like we hit, like is pinpointed to the right problem based on us basically talking to our users constantly and seeing like, what is your actual pain point? And what we figured out was there's lots of people in the world that, regardless of whether they have the money or not, because the process itself is so high friction, there's just a lot of people that are interested in investing and managing their own real estate properties, but it's such a pain to do it. And so a lot of them just either don't do it at the scale that they want to, or just don't get into it at all, right? And so this desire to own something real, I think it's maybe stems from a part of the American dream, if you will. And so it definitely resonates with a lot of people. If you pitch investment, other asset classes like stocks, bonds, even cryptocurrencies to a certain extent, not everyone's necessarily interested in it. But I've yet to meet someone where if you ask them a question like, hey, would you like to invest and own real estate, as part of your portfolio in life? Like, I've never heard anyone just flat out say like, no, I have zero interest in owning real estate. So I think that's the main point, and that's why it's resonated with so many people, of all ages and demographics and background. So we're really excited about that, and we're very fortunate to have that kind of attention. So over the last, two-ish years, we've successfully, onboarded and essentially fractionalized over 140 properties to date. And they represent a variety of asset classes. Like, we have a strip mall right now on the platform where the main tenant is anchor tenants are McDonald's and Domino's, and it's triple net lease. So we have commercial properties like that. And then we also have single family properties. We have duplexes, triplexes, and we have Airbnbs on the platform. So it's really a diverse set of asset classes that you're able to reach through our platform. And over the years, we've done over, at this point, probably 39, closer to $40 million worth of transactional volume.
Wow.
So it's been really exciting to see the business grow.
Well, that's absolutely incredible, and what a great concept. Excited to dig in a little bit on the actual mechanics of it. What does it look like? What does it mean? So we're going to hold that for just a minute. We're going to take a quick sidestep here to our quirky questions of the day. We're going to put you on the hot seat, Jerry. These are listener submitted questions, so we'll have a little bit of fun with it. Maggie's got the envelopes. We're going middle envelope. If you do want to submit quirky questions, you can do that to Maggie with a Y at newviewtrust.com with a U, and we'll get those added to the envelopes here. Jerry, you ready to go?
Let's do it.
All right. Question 1. Does a straw have 1 hole or 2?
It technically has 2, or else it doesn't function properly.
All right. Well, as a quant guy, no matter how you answered that, I want you to know I was going to automatically just assume it's the right answer. So we got you.
I think it might be more of a philosophical question, to be honest.
Yeah, there's probably a little truth to that for sure. All right, number 2, we'll get off the quant stuff and get into the food stuff. If a burger is made with as a plant-based patty, is it still a burger?
Ooh, that's a tough one, because technically a burger is, it doesn't have to be meat-based. A burger is how you make the food, which is 2 buns with lettuce, tomatoes, and some sort of patty in between. It doesn't have to be meat. But I know a lot of people would consider sacrilege to have a burger that is plant-based. So I really think that depends on where you come from. If you're in Texas, the answer is no. If you're outside of Texas, the answer is probably yes.
And that's probably a pretty good geographic lesson for all of us. I think you're right about that. That's always an interesting one, and I've always asked, which I love. And I have to say that the plant-based stuff, whether you eat it permanently or whether you eat it occasionally, it's amazing how close and how much a lot of the plant-based foods taste like whatever food it is that they're similar to. But it is always interesting. Like, it's a turkey burger. Like, why isn't it called something uniquely, called on its own? Or if it's plant-based, why isn't it called, something unique? But I suppose you're right. A burger is a burger. The protein doesn't really matter.
Yeah, definitely. And the technology is getting better. So I think at some point when you start doing blind taste, maybe 5-10 years in the future, I don't think people will be able to tell anymore. Even those like extreme meat lovers, I think they won't be able to tell anymore.
Yeah, I'm with you. I was surprised I had one of I think it's Beyond Meat, and I'm not, I don't know, other than a little bit of texture, if your eyes were closed and you ate it, it's pretty darn close.
Yeah.
So, I put enough ketchup and ranch on my burger anyways. It really doesn't matter what the protein is anymore. So
exactly.
All right, Jerry, last question. We'll let you off the hook. This is an A or B answer. Texting or phone calls?
I'm a millennial, so it's A. I prefer texting. It's just faster and more flexible for me.
All right, texting it is. I think the world is moving completely in that direction, and for all the same reasons. You can fight it all you want, but at the end of the day, the convenience factor of it, man, it is really nice just getting to the point and moving on.
Yep.
All right, Jerry, you are officially off the hot seat. Thank you to those listening that submitted quirky questions. Please continue to do so. Always one of my favorite parts of the show. Well, Jerry, now we can kind of shift gears a little bit. We kind of talked about how Lofty came to be. We've talked a little bit about kind of what Lofty is, at a high level.
Yeah.
Let's kind of dig in a little bit. So, Lofty creates fractional ownership as a marketplace for investors to buy actual real estate. So you're seeing the actual property and understanding the details.
Yeah.
So if I'm an investor and I want to go put, let's just say $500, if you will, into a property that's on there. Let's say that strip plaza, because I think you've given that example, the piece of commercial real estate. How's it work? What does it look like mechanically, and what does it mean for me as an investor?
Yeah, exactly. That's a great question. So let's start at the top, right? What we wanted to build was a platform that mimicked and basically not even mimic, but essentially provided you all the benefits and the things that people love about real estate investment, process-wise, right? And then just simply remove away all the frictions and problems and the things people hate about the process, right? And so if you think about it, there's every year thousands of people go out and they purchase rental homes that they rent out and manage on their own, or they have a third-party property manager for them, right? And how does that work? Well, typically the investor or owner will own it through an LLC, right? As an entity. So the deed is actually owned by the LLC, and then you as the owner, you own the LLC outright. And by proxy, that is how you own the property. Now, you would want to do that typically for liability protection, right? So this way, someone slips on your driveway and sues you, only your maximum exposure is that property. Like worst case scenario, you lose the property, right? That people can't come after your personal assets. So it's a smart thing to do. So that's actually exactly how it works on Lofty. So if you extend that model to say, now what if instead of one owner, right, there's two owners? Let's say you and your brother or a family member decide to co-invest in a property together. Well, it's the same thing, but now maybe each of you own 50% of the LLC, right? So essentially the ownership of the real estate has been fractionalized and people don't even realize it, right? Now there's two owners, each owning 50%. Now you keep extending this example out, and now maybe you have 100 owners. Now each person might own 1%, or one person owns 20%, and the other person owns, 12%, whatever they desire, right? And that becomes really flexible, where people can now have the ability to say, the house is still the same house. It's still worth the same price. Let's say it's $1 million, but now someone can say, well, I only have $10,000. Normally, I wouldn't be able to invest in $1 million house, but now I can by owning just $10,000 worth of this property, right? So that's how the mechanism works legally underneath. So every property on our platform was originally brought on by just a person looking to sell the property. We don't select properties for our users. We don't even vet them. We don't tell you that, hey, this is a good deal versus a bad deal. We're not a fund manager, right? And every property is owned through that mechanism I just described. So every property is owned by an LLC. And when you invest and purchase ownership in one of these properties, you are basically purchasing ownership of that LLC, and by proxy, the underlying property that the LLC holds.
Sure.
It does nothing but operate and own that one property. So that's mechanically and legally how everything works. Then the next step is, okay, let's say you're interested in a property. You know that despite the fact you might not have all the money, or you're not interested in putting all your eggs in one basket, so you want to diversify into multiple properties. What's the next step that you would do in the traditional real estate market? Well, you would basically perform some sort of due diligence test on the property. You would you would look at the inspection reports, you would look at the appraisal reports to see like, how much is this property really worth? Do I think it's a good deal for me or not? What is the cap rate? Is there currently a tenant paying rent, right? Like, who is the property manager, right? Things like that you would kind of vet. So you do the exact same thing on Lofty. Again, we don't manage assets for you. We don't tell you a property A is a good investment, versus property B. Every property you see on our platform has a little tab at the bottom where you can actually see a documents tab. And in it is publicly available for all. You don't even have to have an account to see these. The exact documents I just described, appraisal reports, inspection reports, every receipt for maintenance that's been done on the property is publicly available for you to download and vet, right? And so the idea is basically you would find these properties on our platform, perform these diligence yourself and say, hey, I like this property. I read through everything. It makes sense to me. I want to invest in it. And then the next part is all the technology we built, basically bypassing the need for an agent, bypassing the need for escrow companies. You just click a button. You can pay with your credit card. You can pay through ACH transfers. You can do bank wires. You can even pay with cryptocurrencies if you want to, right? And now immediately within 4 seconds, you legally become an owner, and our platform handles all the things. It tells you how much money you've made, how much rent you've earned, when you go to withdraw rental income, right, that are distributions to you. Every LLC has its own bank account that is separately custody. It is not controlled by Lofty, but we build the API software so that when you withdraw money that belongs to you, that's all you can withdraw, because there's money that belongs to your fellow co-owners in there as well. So it gives you the ability to withdraw rent directly from the LLC's bank account. And it tells you, what percentage you own. And we have an active secondary market, which means, let's say you've owned a property for a few years and you decide, there's another more attractive property. I want to roll my funds into the new one. You can just list your interest for sale on our platform, and someone else who's interested can come and buy it directly from you. And these are all peer-to-peer exchange, trades where Lofty is not an intermediary. We build the technology so that there is no intermediary at all, but it's still trustworthy and you can trust in the process. So that's overall how everything works on Lofty, what you actually own and how the investment works. Now, because you're the actual owner, what ends up happening is, there's a third party property manager that handles the day-to-day stuff, right? Because you don't want to be the person picking up the phone call like at 3 a.m. when there's a leaking pipe or something. So they'll vet the tenants, do credit background checks. They're the ones putting out the properties for lease if it's currently empty, and they're the ones that handle all the day-to-day stuff. But anytime there is a need for ownership consent, right? Because the property manager is not the owner, they can't just do whatever they want. You as an owner, along with your fellow owners, actually vote with your interest to determine how you want to move forward with the decision, right? And so an example might be, hey, something's broken, like a back gate or something, and the property manager has gone out and gotten 3 different contractors, and they've all provided quotes. The invoices are attached. Here's the context. What do you want to do? You can choose to not repair it if it's not, if it's optional and not urgent. You can then choose to repair it, and so which company would you like to go with? And you would just vote as a user, and everyone's votes are automatically compiled. And the operating agreement of the LLC says that for any decision to move forward, you need a 60% supermajority, right? And so the votes are tallied, and if a decision reaches 60%, then it gets carried out, passed on to the property manager, and they implement it. So this is not a passive investment platform. It feels passive because, again, we removed all the annoying headaches, like of you trying to get a property manager on the phone, scheduling conflicts, things like that. Now you can just vote over email, and it's extremely straightforward and takes you 5 to 10 minutes on the comfort of your own home on your laptop, right? So that's how all overall the platform works, how you manage it, how you're able to invest, and what you actually legally own.
Well, that's really, really cool. If you think about it, a lot of the real estate that's available that's fractional is passive. You own a fractional interest, and there's some sort of manager
Exactly.
that has all
Yep.
the rights. And there's nothing wrong with that model at all. And passive investing certainly has its place as well. This is cool because it's really fractionalizing real estate into small tranches while still allowing you to be an active investor in the deal. So if the property needs to be painted, or what color to paint it, or whether or not, they're going to upgrade this or change this, all of that,
Mhm.
you still have a voice in, through a vote. And that vote is managed through Lofty, if I understand correctly, and cascaded on to the property manager as far as how to act.
Yeah, so I wouldn't say we manage it. It's more that we facilitate it and we build the technology that allows this communication to work effectively, right? So one of the beautiful things about our platform is that, like I said before, fractional real estate actually has always existed. It's just that because of the nature of, you can't necessarily trust strangers online all the time. Most people do it with friends and family, but it's extremely common here in the United States for groups of, colleagues who have worked
Yeah.
together for a long time, family members, friends, to pool money together and go and invest in a house and rent it out. And then they would collectively manage it together, right? So that process isn't new and we didn't invent it. We just figure out a way to build the technology so that you can extend this instead of just 4 or 5 people, it can be 400 people, and they don't have to be your friends anymore. You don't even need to know who they are. All you need to know is that everybody wants to make money. Everyone has a vested interest to have this investment do as well as it possibly can. And we build the technology to allow this group of people to communicate and effectively make collective decisions together.
Well, I think you just said something that really, to me, kind of puts the bow on the fractional ownership, because one of the dangers and challenges for fractional ownership is, yeah, who am I owning this alongside? Is Jerry going to hold up his end of the bargain like we agreed to? And how does all that work?
Yeah.
What's nice about the peer-to-peer is that you fractionalize it to a point where everybody does have the same goal, right? And that is to make money. And no one person in that ownership pool really has any different of expectations because they all bought fractional ownership. Anyone that really wants full control or wants to manage it themselves, this probably wouldn't be the platform of choice for them to begin with. They'd probably go the more traditional route, set up their own LLC and have full control. This is really the best of both worlds because it allows you to vet property a little easier. It allows you to diversify money across multiple properties much easier, lower quantities. But it still gives you that ability to be part of the decision-making and part of the deal itself. So what a really cool combination. If we can keep that thread going, I'm going to kind of just walk through, make sure the scenario still makes, sense. So I go on to Lofty. I set up my account. I put, $500 into property A. As there's items that arise, I'm going to be part of that decision-making process via proxy vote. 60% supermajority, it's going to move forward. We don't get supermajority, it's going to be can.
Yeah.
Anywhere through that process, as I'm accruing income, I can withdraw that. So if I make $20 a month in my portion of rent, net of expenses, right, I can withdraw that, which is really cool. I can have access to that. So now let's translate that into, I decided, you know what? I've made money off this for the last couple years. I'd like to get my $500 or maybe more, assuming that it's gone up in value. How do I get my money out? How do I liquidate, sell, in a fractional ownership environment?
Yeah. And so the same way that you bought into it, right? So when you're looking at these properties and you say, I'm interested, a lot of times when you're buying these interests, you're not buying them from the original seller anymore. You're not buying them from us. You're actually buying it just from another owner who was previously a member of that LLC. So it's the exact same process when you're able to buy, but you can also list your shares for sale through the marketplace, right? So that's one way to liquidate, and it works really well if you are a very minority owner. If you own 1%, 0.1%, and things like that, and you just want to get your money out quickly, deploy it elsewhere, it's very effective for that, right? And that gives you an option that makes real estate a lot more liquid than typically people can experience, right? Now, of course, it's still not like trading stocks. So I just want to set expectations. It's not like you make a listing and then immediately in 1 second it sells out, right? You could, if you're crazy and you price the interest at 50% discount to the market value, then yeah, actually we've seen that happen with some people. Like immediately someone's just like stalking the order book. They'll come in like, wow, what a great deal. I just bought a house for ownership in a house for 50% off. Like people will take that immediately. So that's kind of how it works. Otherwise, if you want to price it at the market price, typically it takes about a month and a half, which is still on average like pretty significantly better than a lot of real estate markets. So that's how you would sell. Now, if you're a large majority owner, like if you own substantially more tokens in a property, what you can actually do is, if you want to, and even the minority owners could propose this as well. Any owner in a property it's their right. They can actually propose a vote, even if they only own like one share in the entire outstanding pool. And you can actually propose to sell the underlying property as well. So that's actually already happened 4 times on the platform. And you basically retain an agent. You guys vote on which agent to actually use. They give you some recommended listing prices. You vote on whether you want to accept that or not. Property goes up for sale. You see it on the MLS, and hopefully someone comes along and buys it. And then it goes through a typical escrow and closing process, at which point the funds from the proceeds will be sent to the LLC's bank account. And then you would basically hand in your shares to us, and then we would send you the redemption. And then this is how you're able to liquidate a property if you like as well. So those are the 2 methods to essentially get funds out.
So you've got the ability to really create liquidity via secondary market for just your fractional shares. And then any one of these investments or investors always has the ability to propose a full sale. And that really is a traditional exit, right? I mean, I think we would refer to that as kind of a full cycle deal. You bought it, you held it,
Yep.
for whatever reason, maybe market conditions, became very attractive to sell it. I
Yep.
propose it regardless of the number of shares I have. And as long as we
Yep.
get super majority, we're on our way to sell it.
Yeah, absolutely. And to even extreme, we always say it, but a lot of people don't either don't believe us or don't understand the realm of possibilities. But truly, we don't manage anything for you. So you guys are self-managing, and that means you can do whatever you want as long as it's, technically speaking, legal, right? Like if you say, let's burn down the house for insurance money, like we'll say, we're not going to be in the middle of that. But anything else, that's legal, we're able to kind of help you facilitate. And so one example is after the sale of the property, if 100% of the owners actually agree to this, right, you can actually do a 1031 exchange, which is nobody redeem anything, and you roll the funds into another investment of like property, and then you don't get taxed on the profits. And so there's a lot of these benefits and flexibility in the ownership structure. You can basically propose and vote on whatever you like.
Yeah, it is. It's really amazing because typically, when you get into fractional investments, you really give up.
Hmm.
And I shouldn't say give up. You voluntarily give up what you don't want. You buy
Yeah.
passively. This is really a cool intermediary because you don't have to give up the ability to be part of the investment and have a little more hands-on approach to it. But at the same time, you're also not the sole owner dealing with toilets and tenants and all the, what can be perceived as headaches
Yeah.
of owning real estate. And then the fact that you
Exactly.
can still execute 1031s and other things is
Yeah.
really cool. What is the average? Sorry to put you on the spot numerically, but
Hmm.
what's the average number of investors that participate in a deal? And I
Yeah.
know that probably runs the gamut based on the price of the deal, but is there kind of a
Exactly.
number of investors that I'm going to be alongside if I were to invest in a deal? What are you seeing?
The distribution is honestly quite varied, and you're very much right. It depends largely on the price of the deal. With higher prices means more investors. So we've seen anywhere from a low of 40 on a property that's maybe worth about $150,000 nominally on that deal, to maybe 600-700 on a deal that is worth
Wow.
nominally around $1 million.
Okay.
Yeah,
So
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 you do see
you're
that wide range. Yeah.
Yeah, and I suppose that makes sense. Your investors probably on the platform are really looking to diversify amongst a series of properties. So even if they had more money, they may not increase the amount that they invest in any one property. They just would buy more properties
Yeah. Yeah.
through the process. What haven't I asked, or what Jerry, is anything on the platform or that Lofty does or offers that's pretty cool or unique or different that our listeners should know as we kind of wrap the podcast up today?
Yeah. So two quick things I'll sort of add just before we wrap. One is, what the technology and the platform is actually built on the blockchain, right? But doesn't necessarily require cryptocurrency per se. What we've done is wrap the technology. We're using it essentially as the plumbing, as much as possible. And so you don't need to be experienced or understand blockchain or cryptocurrency in order to use it. But a lot of the benefits that I mentioned, like, hey, how are you able to trade peer to peer directly without an intermediary, right? Traditionally, like seems like impossible, are all feasible because of the technology. But I would say for people that are scared of cryptocurrency or don't understand it, I would say there's really no setbacks as far as using our platform, mainly because we very intentionally built it so that you don't need to know or understand any blockchain stuff to be able to use it. There are still wallets, like you hold your interest in your cryptocurrency wallet, but it's created for you when you create an account. And instead of understanding private keys and all those crazy complicated things, you just click buttons on a website and you can operate everything as is. So it's an experience that everyone is actually able to understand it and use. So that's one. Then the second thing is, our platform is actually very, very, very flexible, like the structure of the legal structure and how everything works. So you kind of mentioned, if someone wanted to own the house outright, they might not necessarily come here. But the funny thing is, actually, we do have users like that. They still weirdly prefer our platform, mainly because there's no bylaw, or there's no restriction to say you can't own 100% of the shares yourself. At which point you're just a sole owner, right? But they may still want to do this because, again, they get to manage and do things just virtually online, which is significantly easier. All the diligence documents are standardized and always provided to them, so they don't have to worry about that. And then they don't have to deal with traditional title escrow closing and all of that work. And lastly, they actually benefit from economies of scale. So, for example, there are third-party property managers and other services like insurance providers, right, for renters insurance, home insurance, that come to our platform and say, hey, you have a lot of users, you have a lot of properties, like we would love to offer our services to your users. And over time, we quickly realized, because we have so many properties, so many users, it's kind of like Costco. You can start commanding economies of scale and say, sure, we'll tell our users, like, you made this offer, they have the option of voting and switching over to your insurance, but what are you going to give them, right? Like, why would they waste all this time just to switch? And so you start seeing a lot of discounts and bulk discounts offered onto our platform, especially from institutional property managers that normally wouldn't work with retail investors who only own one rental property, right? Because it's just not worth it for them. But when owners on our platform vote, they sometimes vote to onboard 50 properties all to one property manager, right? That's institutional grade and can handle something that scale. And so they'll come to us and they'll say, okay, well, if your owners are able to do that, instead of charging you the typical 10%, we might charge you like 7% on the property management fee, right? Insurance might say, instead of X dollars, we'll charge you Y dollars per year instead. And so what ends up happening is actually quite interesting. If you were to go out, invest in your own property in one of the markets that's available on our platform, use the exact same property manager, use the exact insurance company, you would end up making less money because it's just more expensive if you were to do it individually. But if you did it through our platform, right, you get to save on a lot of work. But just purely from a cost side, you actually pay less. And so your overall net return over many years, you get to compound a little bit more.
That's impressive. And certainly economies of scale is probably the biggest challenge for most investors in, scaling in real estate, especially on the residential side, is it's very expensive.
Yeah.
So if they can leverage not only the platform to find and diligence properties, but also to hold them on a blockchain and take advantage of economies of scale, I can see why this isn't just for fractional ownership. I mean, you certainly could be a full-time investor owning 100% of the tokens of any one of these properties and doing it very happily.
Yeah, 100%. And then, the structure is very flexible. So we have individual owners that have accounts on the platform. We have entities, so company accounts, institutional accounts. You can invest in, you can actually do it through an IRA if you would like, through the platform. So you benefit from all the additional tax advantages there. You can, we have people with trust accounts, right? So it's very flexible, kind of whatever you want to do. Like I always say, go back up at the top level, is whatever you want to do in real estate, you can do it on Lofty. It's just that now you don't deal with the annoying paperwork and all the inefficiencies and manual process that literally every person hates. But you get to retain all the other benefits.
In the IRA piece, we I think maybe is a good item to wrap up on. Certainly the IRA is near and dear to us. We believe in the tax-free and tax advantage investing, coupled with good solid investment strategy in real estate. Certainly has a place in that discussion. So love the fact that clients can take retirement accounts, and something that really plays well with Lofty and IRAs is that one of the challenges for a lot of IRA owners is that they want to buy real estate. They like it as an asset class, but really if they don't have, a decent amount of money, they feel like, well, there's no way I can go enter the real estate market. And so this really allows, a $500 or $1,000 IRA account can be a real estate investor through Lofty today, where probably with $1,000, it'd be pretty hard in the traditional sense to go out and create a similar structure. So love what you guys are doing over there. Congratulations on all your success. I'm sure hopefully we can get you back on the show here down the road, and I'm excited to see where that road takes you guys and takes Lofty.
Yeah, I'd love to come back if you guys will have me.
Awesome. Well, before we let you go completely, we're going to wrap up with our Learn Before You Burn segment. This is where we ask our guests to give us a little bit of a lesson that you learned the hard way, so that maybe our listeners can get the same lesson, but not necessarily have to learn it the hard way. So, Jerry, I'm going to put you on the spot in closing here. What's some guidance, that Learn Before You Burn advice or guidance, that you'd share with our listeners today?
Yeah, I would say, to keep on the theme of what we've been talking about, which is real estate investing, I think diversification is absolutely key. I think it's one of the reasons why passive investing in real estate has its place and why a lot of people do love it, is because of that. That's one of the main benefits. Otherwise, again, it's just so expensive. It's hard to diversify in real estate. But facilitating the communications between the property managers and the owners of over 140 different properties for the last 2 years that are in different neighborhoods, different asset class. Some are in Class A, Class B neighborhoods. Others are unfortunately kind of like in the slums, like Class C, Class D neighborhoods, right? That have higher yield, but significantly higher risk. We've seen like everything under the sun, like problems with tenants, like issues that come up, it just unfortunately is a part of investing in real estate. And so truly, we've come to learn that the smartest thing to do is to diversify and don't purely chase yield, because we've seen, users that do that get burned. And unfortunately, it's tough. And people come back and said, oh, I thought, you just rent it out to someone. Like, I didn't know all these things would go wrong and these things would happen. Like, well, welcome to real estate investing. If you,
Right.
it's just part of the risks, and it's smarter for you to diversify.
Well, Jerry, that's fantastic guidance. I couldn't agree with it more. And I appreciate the fact that Lofty is helping make diversification even easier, by offering so many different, pieces of real estate on a marketplace and on a platform where people can put small increments into large number of properties. So congratulations again on everything you guys are doing. Thanks for your time today, Jerry. Look forward to chatting down the road.
Yeah, definitely. Thanks for having me on. Appreciate being here.
Thanks, everybody, for taking the time to listen to us today. Remember to hit that like, share, and subscribe button, or leave us hopefully a 5-star review so you can tell others the story around the value that we're bringing to you guys, and hopefully bring more people into the fold. So until next time, happy investing and take care, everybody.
Thank you so much for listening. We hope the information within this podcast has given you the tools that you need to find your way to financial independence. We would love to partner with you on this journey. Text ALTS, that's ALTS, to 407-708-1853 to learn more about how to get started today. Don't forget to follow us to make sure you don't miss a second of content, and we'll see you next week.